I think what we are seeing now is in companies that are built for India are able to go global, right? They spend their 5 years, 7 years scaling up in India, and now those same technologies or products are relevant to Middle East, it's relevant to Southeast Asia, it's relevant to Africa. I think that is a great trend to see. I think orienting away from competition and towards the customer, I think is a massive mindset shift. I also tend to use the term infinite mindset because customer opportunities are infinite. We should not be limiting ourselves by who we see as competition.
Welcome to the inaugural episode of the India Show, hosted by Oxfounders Global and TiE Delhi-NCR. Today, we have the privilege of being joined by Alok Mittal, President of TiE Delhi. Alok is the co-founder and CEO of Indifi Technologies, a pioneering platform expanding access to debt financing for Indian SMEs. His journey began with a strong foundation in computer science, and Alok founded jobsahead.com in 1999, which became India's leading e-recruitment platform before its acquisition by monster.com. He also played a pivotal role as the founding member of Indian Angel Network, fostering early-stage investments across the country. Currently, among other roles, Alok continues to mentor and support entrepreneurs as president of TiE Delhi, driving innovation and growth in the Indian startup landscape. Listen in to his insights about the evolving entrepreneurial ecosystem in India and his vision for the future. Fantastic. Thank you so much again, Alok, for joining us on this inaugural episode of our new India show that we have the pleasure of conducting with TiE Delhi. We'd love to start the discussion by talking about India as a startup hub. And I think our first question would be, to get us started, is what do you think are the core ingredients that make India such a strong entrepreneurial hub? Is it talent? Is it culture? Is it capital? Is it policy, or is it something else, or a mix of those things?
Yeah, thank you for having me on the podcast, Lucas. The answer to this lands up being everything. And I think that is probably the right answer to this question. However, I do want to, emphasize the cultural underpinning of Indian entrepreneurship. Entrepreneurship is not a new trade to India. India is a land of entrepreneurs and small businesses. And honestly, all of us in our families can identify people who were entrepreneurs before us. They were entrepreneurs 50 years back. I think what has changed dramatically over the last 20 years is the access to resources, which has allowed many of us to express our entrepreneurial ambitions, more substantively than what our parents and grandparents were able to do. But even as we speak, India has 60 million small businesses, each of whom is an entrepreneur in their own right, trying to grow their own business in wake of scarce resources, but very compelling market opportunities.
So would then the key factor be, in terms of the difference between, for example, the Indian startup ecosystem and something like Silicon Valley, that history of entrepreneurship, or how would you characterize the cultural difference you're talking about?
Yeah, no, the United States is equally enterprising. In fact, the strong immigration culture that United States has had has allowed entrepreneurship to be, very organic in that geography as well. However, India is getting the benefit of being one of the highest growth markets anywhere globally for the past many years. And what that has done is to bring forth many consumer markets that were non-existent 15 years back, right? So whether it is from health supplements to new apps and mobile phones, to the desire to have luxury holidays, each of those markets is booming because the consumer markets are growing at a very fast clip. So unlike in the US market, and I've had the opportunity to invest in the US markets quite a bit, um, US markets largely at this point are disruption oriented markets. What that means is that the underlying markets exist and you're trying to bring something which is better, faster, cheaper. right, to replace the solutions that are already there. In contrast to that, the Indian markets tend to be a lot of white space markets, right? The solutions don't exist. They're coming into play for the first time because the demand for that market didn't exist 10 years back. So I think there is a very different way in which you play those two kind of opportunities, and that would be the substantive difference between a market like US versus India.
That's really interesting because I think also a big part of what makes an ecosystem succeed is all the structure around innovation and entrepreneurship. And Silicon Valley, you can talk about the way that universities and accelerators and incubators come together, even on that very specific delineated geography, which has led to innovation cluster. What do you think would be the role of policy, whether that's on a government level or even through organizations such as TiE, in creating those structures for Indian startup founders to grow? And if you could point to, I don't know, maybe any specific policy or condition in the ecosystem that has been really helpful in unlocking that growth in terms of entrepreneurship.
Yeah. So I think there are several of those levers, right? So the biggest one that I would emphasize on is the desirability of being an entrepreneur, as an option. And the reason I say that is that when we were starting when I was starting my first company in the 90s, entrepreneurship was not a highly respected profession, right? In fact, in India, there was a unique terminology for this. Entrepreneurs were called promoters, and many of them are still called promoters. But the startups were called schemes. So that entrepreneur was a person with a scheme to sell. And many of the entrepreneurs, who came up, large-scale entrepreneurs who came up in the 1960s to 1980s, did so on basis of preferential access to licenses, right? And that was partially the reason why entrepreneurship was not for everyone. 90s start to change that. And companies like Infosys, suddenly made entrepreneurship very desirable. Organizations like TiE played into that, and both made entrepreneurship highly aspirational, but at the same time provided the infrastructure for entrepreneurship to flourish, right? Mentoring networks, investment networks, just basic education, networking. So TiE was founded in 1999 in India, and has played its role over the last 25 years. And I think somewhere down the line, the government recognized that they can actually further strengthen this whole element of aspiration. So over the last 10 years specifically, the government has gone out and now accorded a recognition to startups, right? Which may, in an entrepreneur's mind, may mean nothing or may mean everything. In their family's mind, and we are a very family-oriented culture, it means a lot, right? Finally, their kids are doing something which is legitimate, right? And with that has come the whole support system. Now, the second layer of infrastructure, which is private equity markets, capital markets, talent, all of that has developed alongside. But I do think that one of the key transitions that have happened in the last 25 years is from this, somewhat surreptitious notion of entrepreneurship to something that is celebrated, widely across the whole ecosystem.
I think absolutely that visibility is something which organizations like TiE, for example, can bring, along with, as you were talking about, networks and the infrastructure that allows entrepreneurs not only to be seen as successful on paper, which is the shift that's been happening since the 90s, but also actually grow their businesses and do something really brilliant. I've got a question on that. Could you share maybe a time where mentorship provided by TiE made a real difference to a startup's growth trajectory?
Yeah, absolutely. And sometimes some of these things, seem very small at that point in time, right? But in their eventual impact, land up being fairly substantive, right? So even if I take my own example, I founded my first company in 1999. I was 27 years old at that point in time. My father was a government servant. My mother was a housewife, right? So we didn't come from a background where, entrepreneurship was a topic of discussion or business was a topic of discussion around the dinner table. And in that context, having access to the kind of network that TiE brought on board and almost unconditional support, of saying, hey, you're going out there, even if you fail, it's okay, right? And there's a place for you to come back, right? My first super boss, when I resigned from my job to start my company, called me into his room and said, hey, why are you leaving the company? And I said, I want to do a startup. He said, I'm not going to stop you, but you should just know that if you fail, we have a place for you back here, right? Sometimes those very small gestures completely changed my risk perception associated with startups, right? And it made it so much easier for me to go out and say, hey, I'm going to take this risk, but this is not really a big risk because I know I have a place to land. So I think those small interventions, at least made a big difference to how I felt about my entrepreneurial journey. And I hope that we've been able to make that impact with several other entrepreneurs.
Yeah, I think that the lens of de-risking entrepreneurship is such an important one. And I think also that's something that universities even can play a big role in really encouraging students to look at entrepreneurship not as I'm going to lose out on however many years of career, but actually providing an environment where people feel able to take that risk and take that risk even earlier on as well. So I think that's super important. And I think that goes into one of the topics that we wanted to ask about specifically, which is like, what are the ingredients that make startup teams successful? You're obviously a founder as well as an angel investor yourself, and so you've seen hundreds of startups throughout your career, both on the founder side and on the investor side. If you had to condense that into what would you say separates the truly successful startups from all of those that never take off? Is there a special ingredient?
Yeah, so Lucas, there is obviously a lot of literature on what makes successful founders. And in spite of that, as investors, we get it wrong all the time. So I'm going to largely kind of talk from, a little bit of my own experience and things that I value. I don't claim these to be absolute truths in any sense. But one of the things that I like to look at in entrepreneurs is how closely connected to the ground are they, right? If you are listening from the customer directly, that's your best chance of success. If you are, reading it about an opportunity in the newspaper and dreaming up your business plan, you're already far removed from the customer reality, at least in time. And if you're looking at it in a consulting report, then you are even further removed. Right? So I think that is one thing that I look for of our entrepreneurs bringing their own unique insights and their perspective on the market because they have gone and spoken with customers and they're not parroting what is there in the media and in popular conversation. I think the second thing which I have found successful entrepreneurs to exhibit is this strange, almost controversial mix of humility and arrogance. Right? You can't be a successful entrepreneur without having a degree of self-belief, almost bordering on arrogance, because you will encounter the tough days. And there is something in you that is delusional and saying, hey, this is still going to work. But at the same time, when you're sitting with your customers, the opportunity set, there is extreme humility in listening to the customers, understanding what within what you did was working versus not, and being able to, switch gears, change directions with a relative degree of agility, right? So I think this humility plus, I call it arrogance. You may stop at calling it self-confidence. I think is another great trait that I've seen in entrepreneurs, and many stories in India, have been entrepreneurial stories over 10 to 15 years of making. The cycle of building a company in India tends to be longer than what we've seen in the United States, for example.
Yeah.
Right? And that means that there are so many more opportunities to flatten out, to rediscover your growth curve. There is more disruption that can come your way, right? We are in 10th year of our business. We almost wonder sometimes whether we are still disrupting or we are the ones who will get disrupted next, right? So having that degree of awareness and humility, I think, is a key trait in entrepreneurs.
So that really speaks to the value of the individual founder and the entrepreneur themselves and what they can bring to the table. Would you say that, especially in early stage businesses, that is the key ingredient? I mean, of course, there's really important other things like the product, the network, but is it possible to say that if you had to choose between, let's say, a great product, a great team, or a great individual founder, and a great network, you'd go for having that great team?
Yeah, I think a great team, can figure out, how to get around product challenges, how to get around market challenges. However, for me, a close second would be the market that you pick, not necessarily the solution that you adopt. Because, if you look at degree of difficulty in pivoting out of a market into a new market essentially is a new business, right? It's easier to pivot and say, hey, we are going to change our customer segment a little bit, or we're going to change our offering a little bit. Those are easier pivots to execute than a pivot out of a market or an opportunity, a problem set. So I do think that the team closely followed by did you pick the right problem, right? Would be my kind of combination of what's critical.
Yeah, and I think you raised a really good point there in terms of how teams navigate challenges, and partly that's to do with picking the right market. But also, I think, another roadblock that a lot of companies face is navigating the fundraising landscape as well. I mean, let's say you've got a great team, you've picked your market well, but now depending on what kind of business you're producing, but you're going to need a lot of capital injection at the start. How would you say founders should navigate the fundraising environment? And are there kind of specific conditions around the VC environment in India that founders should be aware of and should try and navigate?
Yeah. So, the venture environment in India, I would suggest much like other parts of the world, tends to be extremely volatile, right? You can land up in, periods of time when venture money is abundantly available and easily available, and then you can land up in what is referred to as funding winters. And being able to adapt to those is an important requirement. Whether you're raising your first round of financing or you've raised some money, right? But then you need to calibrate your investments depending on what the funding environment is looking like. I think the good part has been that in India, we've seen far higher survival rates when funding winters have struck, because the underlying cost of doing business inherently is lower, right? So $1 million in India goes, much further than a million or even 2 million would go in the United States. And Indian founders have shown that ability to dial up or dial down. I think the second important piece is to, while starting a business, understand what order of magnitude of capital is required to build that business, right? If you're creating new market demands, new customer needs, market development inherently takes a lot more capital, right, than serving a market where the need is well realized, right? So I think on that scale, it's important to have clarity on how much money will be required to build the business out. Similarly, businesses that exhibit strong network effects typically initially require a lot of upfront investment to create the network in the first place, right? You can't pilot your way around that kind of a business. Right?
Yeah.
Third, I think in many cases where the capital requirements of a business have shot up in India have to do with competitive intensity, right? So typically in duopolistic markets, if one player is raising money, it becomes almost a necessary condition for the second player to raise, competing amounts of money to be in the play. So I think those are some of the factors that should drive thinking around, fundraising strategy. Of course, I must mention here that we are seeing an increasing trend of founders who just want to bootstrap their companies. And this is both in response to the kind of opportunities that are amenable to bootstrapping, but also founders wanting to continue to retain control and not be subject to volatile, private capital markets. So there are some very compelling examples of bootstrap companies that we're beginning to see.
And actually, I think that speaks to quite an interesting point, because funding's definitely incredibly important for startups and startup success. And many companies struggle to do without funding, especially if they have some sort of deep tech solution or something that needs a little bit more upfront investment. But I think what that also means is that a lot of founders feel that pressure to raise funds as a way to prove themselves and get some level of recognition. And it becomes the sole focus of entrepreneurship, where once they've raised funding, there's this sense of, we made it. Is there a lesson from this that you think a lot of founders have to learn the hard way, that actually once they've raised a significant amount of capital, that's the beginning of the journey rather than the end of it?
Yeah, you're absolutely right, Morgan. And I think there is this kind of a, almost a peak and trough to that. And what I mean by that is, um, raising your first 5 million, 10 million, 20 million can look like an achievement, right? Once you've raised a lot of capital, right, I think some of that subsides, because by that time, entrepreneurs start to realize that continuing to reserve that capital requires them to achieve more and more, and capital is a responsibility to equity shareholders and not a privilege that they grant on us, right? So yeah, I do see this sense of euphoria when people are raising their first round or second round. But in most cases, by the time they reach their third round or fourth round, I do think that entrepreneurs become more responsible towards capital. As also, just the growth obligations that it brings with them. I do think that a lot of this pressure and sense of accomplishment in raising capital also flows down from media, because that's the news that you know gets thrown on front pages and primetime news the most. Rather than saying, "Hey, this company suddenly, now is doing 100 million revenue." Right. So I do think that the benchmarks of success need to be changed, need to be altered, that we are rewarding the right kind of behavior in the ecosystem.
I'd like to just move into a little bit more discussion of trends that we're seeing in terms of both what sectors founders are developing, but also more generally looking at the ecosystem, because I think one of the strengths of the Indian startup ecosystem, and one of the ways that it's diverse as well, is that a lot of Indian startups focus on solving local problems, and those are really scalable with such a big internal market as well. Do you think that as the ecosystem continues to grow, we're going to see more global product companies coming out of India, or would you see that trend continuing to be primarily focused on the local side?
Yeah. So Lucas, we are already beginning to see an interesting mix of those two, right? So for example, um, uh, on the local front, the activity has gone up as the consumer markets have broadened. Today, one of the core sectors is direct-to-consumer brands. And in many categories, as I mentioned earlier, these are brands that are showing up for the first time, right? Take something as simple as luggage. There has been no brands introduced into that market for last literally 30 years, right? So the suitcase that I carried 5 years back was the same that I carried 25 years back. And then suddenly there is a set of direct-to-consumer brands that have come in to play into that space because they're recognizing that the consumer expectations have changed, their propensity to pay has changed, and so on. And we are seeing this category by category come up, right? From jewelry to food services to mobile phones, accessories, beauty products, and so on. Uh, Somewhere around 2010, the Indian SaaS industry, software as a service industry, started to flourish. And there are many SaaS companies that we have seen which were building products for the world, right? So much so that I would say that they were building products for the world ex-India. So India was not a primary market for them. And we have, companies like Freshworks and so on that have done a great job at doing that. I think what we are seeing now is in my mind is a more sustainable pathway where companies that are built for India are able to go global, right? And for example, I operate in the fintech sector. Many companies in the fintech sector, initially built for India. They spend their 5 years, 7 years scaling up in India, and now those same technologies or products are relevant to Middle East. It's relevant to Southeast Asia. It's relevant to Africa, right? So they are going global in a more organic and measured way. I think that is a great trend to see. What that also signals is that the same technology that is being built for the Indian market is relevant outside. And interestingly enough, if I go back to the 90s, one of the first software product companies that I remember is banking software companies. So Infosys had this product apart from its services business, which was a banking product, which then became a global banking product. So maybe we are just coming a full circle in terms of being able to build products locally, but then be able to scale that globally.
Well, I mean, that's brilliant. We'd love to see lots more Indian startups as well expand their products into Europe and the world. That'd be really exciting to see even more of that. We're coming up on the end of the interview. If it's okay, I still have a couple of quick fire questions and then we can wrap it up.
Sure.
First question. What's one startup every founder should study and why?
Yeah, I still do think that Amazon is a good playbook to study. And the reason for that is that, their early stage journey was as challenging as any other startup. It was an idea which, was hotly contested. It was built with a very high degree of customer connect and customer empathy. And then over time, of course, it has expanded to several lines of business. But I do think that the conviction, the audacity of the dream, and the pathway to build it are things that are, casebook examples of entrepreneurship.
What's one mistake that you see founders make over and over and over again?
Yeah, I think hoping that doing the same thing will get different results. I think is a mistake I see, far too often. All of us in our businesses are facing, situations where something's not working, right? And I do think that many of us could experiment more, have a higher degree of urgency to solve for those issues than what I see broadly out there, right? So I think simple principle: if you do the same things, it's likely the results will be the same.
Absolutely. And final question on my side, what's one mindset shift that you think changes everything for a founder?
Yeah, I think orienting away from competition and towards the customer, I think is a massive mindset shift. I also tend to use the term infinite mindset because customer opportunities are infinite. We should not be limiting ourselves by who we see as competition. So I think that's a big one. And honestly, if I think about myself, between my first startup and what I'm doing now, the way we built the company, I think that is one significant change in our own outlook.
And Alok, to end our discussion, which has been brilliant. So I have a background in history, hence the inclusion of this question at the end of all of our podcasts, and that is, if you had to think of one historical figure that you think would have made a brilliant founder if they were alive today, potentially a unicorn founder, who do you think that would be and why?
So I think of startups as a journey in exploration, audacity, fundraising, resource mobilization, and persistence. And for those reasons, I'll go with Marco Polo as someone I would have loved to see as a founder.
That's fantastic.
wonderful. That's wonderful.
We've got a leaderboard of who all of our guests think would have made good unicorn founders. So Marco Polo will be a new addition. We haven't had that one before.
It's been a pleasure speaking with you.
Thank you so
Thank you
much,
so much,
Alok.
Alok.
We really enjoyed it, and we're really grateful for your time.